Good morning, folks. It's Harry Swaminathan. Just wanted to provide an update on our trades. Yesterday, as I mentioned, I took off 10 of this 440 and booked a profit of about $1,000 on that, and then opened a new one, short call at the 430. This is the weeklies. So you can see that I put the trade on at $4.15. And now it's 3.2, and Apple's sort of trading, below 428. Yesterday, I think it closed at 428. So we'll see how this works out. If this also expires worthless, then obviously the 440 is going to expire worthless. Therefore, 4.15 plus 1.78 plus the $1 yesterday, that should even out the loss on this. So that's the Apple update. Baidu is still, we have a small loss of $445, but we have 64 days, so we don't need to do anything there. CAT is, of course, a free trade, so we've already booked the entire cost of the trade. So these 14 calls with 64 days left to expiry, I'm just going to leave it at that. That's a free trade anyway. Costco. It went up yesterday. We had a profit of about 300, but it's come down to 40. But I'm going to keep it on. It's 10 calls. We have a lot of time on that, so we want to optimize the profits on the Costco trade. Gold is again a free trade, and you can see that we already have another profit of 580. So gold should be a free trade. The long call should be a free trade at some point. So we'll probably book the profits on the gold trade on the short call at some point, but the long call would have become free at that point. Google will wait on the trade. There's nothing to do. Priceline is interesting. So here we are with Priceline. We still have if you can see, Priceline has come down to 715. So if you recall, we put the 770, 780 with 36 days left to expiry, and that's what we meant by protecting your profit. So now you can see we have almost an $800 profit on that bear call, and our bull call also has $1,000 profit. So totally we have 1,900. I'm just going to let it let that continue, because the short call, or rather the bear call, is going to have a much bigger time decay, so we can profit on that. So that's as far as this. Now the interesting one is the SPX, where we have a calendar. So let's look at the calendar on the SPX. We have two trades. One is the straddle and one is the calendar. So I'm only looking at the calendar right now, because this is a 2-day trade that we put yesterday, and today you're going to see a lot of time decay. So it's the S&P is trading right at our maximum profit point at this point. So it's like 1555, and this morning the futures are up about a couple of points or so. So this trade is poised to look good. Today we should get a profit of about $2,000 or $3,000 on this, depending on how SPX trades throughout the day. Now the important thing is the SPX will close at a certain point, but that's not going to be the point of settlement, because whatever price the SPX opens up tomorrow morning, that's going to be the settlement price. So we'll see how this one goes through the day. And if it's somewhere between 1550 and 1560, then we'll just let it expire. But if there's a big move today in the SPX, then we might want to try to capture the ideal profit point on this trade. So, but as of now, we don't want to do anything. We'll just keep it at that. So this was a calendar trade, which I wanted to show you how you could capitalize on a 2-day trade. And that's what we're going to do. I think this trade is going to do well today. We'll of course keep our straddle on, because that's a longer term trade, and we'll see how that goes. And we put that when the VIX was about 11.7, I think, at that point. So we got in at the low end, and that trade should do well. So, but it's got enough time there. We have, let me see the Number of days, yep, we've got 98 days for the straddle. So we're looking at this trade right here. So we've got 98 days, and this one is going to expire today, but the settlement price is going to be the opening print of tomorrow. So that's as far as the trades are concerned. I will speak to you guys soon. Thank you.